one of the reasons why Manus re-headquartered to Singapore so that they could access foreign capital. The drama, continues because now the Chinese authorities have actually launched an investigation about whether or not Manus needed to go through the export control process before re-headquartering, before moving their headquarters to Singapore. And they may well be able to say that, yes, they had to, and it's actually criminal. In China, it's a criminal activity not to. We're all talking about it as if it's a done deal, but it may not be.
Welcome back to 60/40 and happy 2026. If you're tuning in for the first time, maybe as part of your New Year's resolutions, the 60/40 podcast covers what's happening in Asia's tech and business scene, with the leaders actually driving the change. We're called 60/40 because Asia accounts for 60% of the world's population and 40% of the world's economy, and growing. So we're here to discuss and break down the latest of what's happening on this side of the world. I'm here with my co-host, Prashant, our serial founder, and Alexi, our in-house analyst, and we are excited to dive into some of these headlines from 2026. Hey guys, how's it going?
Good. New year.
I was like, where's the enthusiasm?
26.
Yeah. All right. So let's jump into it. So the things that I have on the list today are breaking down the Meta Manus deal, especially from the Asian perspective. I think a lot's been written about it otherwise. I also thought that it'd be fun to talk about some of the valuation monetization strategy of Chinese versus global AI startups. And this is particularly relevant given two of the very, very recent, yesterday and today, literally, IPOs of Chinese AI companies in Hong Kong, and then kind of wrapping up on the IPO pipeline outlook for Asia. So, good. Thanks, by the way, for contributing topics. Really helpful for both of you, for everybody, really.
We just agreed.
Yeah, okay, good.
Talk about that.
Not even like a thumbs up in the WhatsApp channel, let me just say, like literally just crickets. So,
the suggestions were so good, we were just speechless.
Yeah.
And it was part of our shutdown, right? It was like, we're just like,
Yeah, just let it ride.
Take it till the 5th of Jan.
Yeah.
Okay, let's get going on Meta Manus. I'll give a quick background, I guess. So the big news is that Meta acquired Manus, which is the Chinese AI company. They were the first ones to launch this idea of a general AI agent back in April 2025. It's built on Claude. They had finished their Series B funding last year, and so that was at $75 million at a $500 million valuation. And reportedly, we're in talks to raise a Series C at a $2 billion valuation when Meta basically came in and just bought the whole thing. Some of the details of the deal is that they obviously are integrating Manus into Meta's products. Manus will continue to stay headquartered in Singapore, but Manus will exit all Chinese ownership and apparently the Chinese market completely. So I think it's pretty interesting from a Chinese AI company that, launched early last year, moved its headquarters to Singapore in the middle of last year, and obviously acquired by Meta at the end of last year or just a month ago or so. So I think, let's break it down. Sorry, did I miss anything on the overview? Anything else that people want to contribute in terms of context for understanding this deal?
Maybe one. Sorry, go ahead, Prashant.
I was just going to say, maybe the one thing I was thinking is they do have a reasonably good revenue run rate going, right? So it's not a fledgling startup. They do have a fair bit of revenue, I think about 125 million ARR. So they would have been quite successful in closing a Series C, given the environment and given the space is still quite hot. It's not like that was not happening, and that's what drove the deal.
Yeah, and I would say based off of that, I think people are estimating like around a 16x revenue multiple, which also doesn't seem like, again, in the AI hype era, it doesn't seem that insane either. Yeah. Alexi?
The regulatory dynamics here are interesting, right? The US and China are decoupling. People in the US can't touch China AI with a 10-foot pole, right? It's got to be separate. But that's actually one of the reasons why Manus re-headquartered to Singapore so that they could access foreign capital. And apparently, while there was scrutiny of their Series A and Series B raises from US investors, the US is now fine with it. So this is kind of largely approved from a US point of view. But the drama, continues because now the Chinese authorities have actually launched an investigation about whether or not Manus needed to go through the export control process before re-headquartering, before moving their headquarters to Singapore. And they may well be able to say that, yes, they had to, and it's actually criminal. In China, it's a criminal activity not to. It's not a
Shit.
civil fine type of thing. So it is still possible that China does with this what they did with the not a tech thing, but the Hutchison ports around Panama and all of that, and like those ports were sold, and then China said, "Hold on a second, we need to review," and it's been stalled since. So that process has started, but obviously China's not saying anything until the decisions are made. So I
Yeah.
find that intriguing because we're all talking about it as if it's a done deal, but it may not be.
Okay. Yes, definitely have it on the list to kind of discuss it from a regulatory perspective. Maybe if we just like jump into the startup perspective now, it's like, from Manus's perspective, does this deal make sense? Why would they take the money now? Is it normal to sell at your Series C valuation? Do y'all think that they could have continued to build and then maybe gotten a higher acquisition offer later versus obviously just taking their chips off the table now? Does this make sense from their perspective, from the founder's perspective? Prashant?
Yeah, so look, I've actually been playing around with Manus for the last couple of weeks more intensely, but even for the last couple of months, a little bit more casually. And, if you'd asked me last year if Manus would have been one of the companies that would make it, I would have probably said, it's just a wrapper. It's an agent kind of like cloak on a wrapper service because they're built on cloud, right? They don't have their own foundational models. I think I would have said they would probably be one of those newbies that everyone gives a good shake, but they will struggle once the early kind of fantasies kind of fall off, right? So I would have thought that beyond the tool you try, the distribution over long term would actually be quite difficult for Manus, right? That would have been the first thing. The second is, look, I think in all these plays, eventually it comes down to how do you build trust? How do you kind of maintain that regulatory kind of certainty, right? And I think, all the points we just discussed in the last couple of minutes around, is this still viewed as a China company, even if they're re-headquartered? Would Americans have adopted it? Could they have adopted it? Etc. would have remained an open question for this startup. And lastly, I think at some point, again, coming back to the fact that they're a wrapper, they would have run out of all the data that was publicly available, right? So they would have not had the social data. They would not have had all the social coordination, group context data that Meta has, etc. So eventually they would have kind of been very commoditized once the kind of early kind of flash in the pan moment kind of evaporated. So for me, they would have gotten stuck in the startup distribution trap, as I call it, at some point. That was coming. So for them, it absolutely makes sense. You got clarity in terms of distribution. You're not just a tool. You can kind of systematically be embedded into the trust that Facebook and Insta and WhatsApp have, and you have all this net new data that you would have never had access to because it's not public data, it's private data in the Meta ecosystem. So I think for Manus, it makes a lot of sense. And the valuation is the current valuation because that's what the private markets were willing to pay. If they were raising at $2 billion, then that's a valuation.
Yeah. I'm going back to our bingo card and predictions from last year. You basically predicted the end of AI wrapper companies. And so maybe Manus was feeling the same pinch, and they were like, we're just taking the money now.
They heard the podcast.
I'm sure that's what it was, obviously. They're like, Prashant says it's over for us, so let's do it now.
And the wrapper play.
I think the point around trust is key, right? They're in no man's land. They're not American. They're not Chinese. Neither side will trust them fully. And client acquisition costs are not small. That first 100 million, that is, that's early adopters. But how do you go beyond that? You need to start burning a lot of cash. And they probably had an offer on the table of, $50 or $100 million at a $2 billion valuation. Or how about $1.9 billion at a $2 billion valuation? And don't forget, Meta has been showering people with money who do AI. We know the public valuation to acquire the equity, not the salaries and private terms and bonuses agreed for these guys to stay employees of Meta for X number of years. It could be $100 million a year per senior person for the next 3 years. So it's not the end of the opportunity. It could be a lot of Meta stock and so on. And I agree completely with Prashant on all of the dangers for a company like this, because I still go back to everything I've said in every single one of these calls when we talk about AI. It does not seem to take much. Once an idea is, once someone shows, hey, I've got a LLM, 4 people copy and start building a foundational LLM pretty quickly. Oh, I've got agentic AI. Guess what Google's going to roll out next week? A version of its own agentic AI based on Gemini 3, on and on and on. So kudos to them to going, you know what? 2 billion is plenty, and there's probably more.
Yeah. And actually, coming back to the difference between acquiring a Manus and its team versus acquiring a port in the Panama is that even if the Chinese government does not approve this deal, let's say for a second, Facebook could just turn around and say, okay, we're just going to acquire the whole team, not the company, right?
Yeah.
Because they have been open and willing to pay $1 billion of in sign-up bonuses. They could just easily write that check, and these could all just become sign-on bonuses. Versus, like, what are they acquiring? They have all the users that Manus probably will ever have. They have the tech, the prowess. There's not that much IP to our point. It's a wrapper at the end of the day. You could rebuild this whole thing in 6 months or 3 months, perhaps. You just need to bring that mindset, that DNA, and that's, I think, what's key here in the deal. They're not buying tech or traction; they're buying team. In my opinion.
I think the danger, though, is for the Chinese nationals in that company they're not going to be welcome back in China ever again if they choose to disregard something like that. But I'm sure there's a middle ground that will likely be worked out.
Yeah, that's right.
Yeah. Okay. So then let's go to Meta's perspective. Like, yes, I think for them, this is a relatively cheap deal, all things considered. They obviously have been trying to hire a lot of the engineers. And so, why would they actually spend you're right. Like the $2 billion is just the equity side. Probably this deal may end up costing them like I don't know, depending on how those bonuses are, right? Like $3 billion in total. So why would they go ahead and purchase the equity as opposed to just doing a straight acqui-hire from the get-go?
To be honest, I'm less impressed or concerned about the deal structure and the equity and the retention split, or the upfront versus the retention split, or any of that. I think this is a marked moment where Meta is saying we're moving beyond the chatbot era, right? We're moving into truly agentic playbook. This was also one of our bingo cards from last year. We said less chatbots, more and more real play, right? So we're moving past the chatbot phase, and agents are the first step in that direction. The second is, if you look at Meta, they've had their own ambitions that perhaps they've come short on, everything from building their own foundational model to truly adopting AI at the core of everything that they do. And Meta actually wants to become the operating system for our lives in many ways, right? So whether that be through the glasses or through any of their hardware explorations, this actually is a halfway ground kind of play, because now you don't have to own the web operating system or the desktop operating system or even the mobile operating system, but you can actually access all of them by consumers using agents to kind of interact with those applications or those operating systems. If that point's not clear, let me know and I'll clarify a little bit more. And the last thing, I think for me, this is a big signal that Meta is claiming in some ways that the foundational models are now effectively commoditized. You can build on it's not like the Manus guys built on the Llama 3 or Llama X, right? They built on Claude. So you can bring your own LLM and you can, but the bet is now on the next layer. It's on the agents and what they can do. So they're escaping what I call the chatbot trap. They're saying we're going past that. We're going to make it more operational.
I hate it when Prashant steals all of my thoughts. So I'm going to add just one more from a finance point of view. In the Q3 earnings of all the big tech companies in the US, Meta was punished the most. I think it fell 20% after its earnings came out because, like everybody, they massively ramped up their capex. But unlike most people, they did not see as big an earnings lift and revenue lift as the market was hoping to see, and they were punished. Not unlike Oracle as well, but Google wasn't, Microsoft wasn't, Meta was. So this was an they perhaps more than others had a bit more of a incentive to go start doing something that is different from what they've been doing, to try to look for revenue generating ideas to cover all that capex as well. It's something that Microsoft has a very easy, if they get the tech right, they have a very easy monetization engine, right? Call up everyone who uses Office and say, hey, check this out. And just pay a little bit extra and your Office becomes magical.
Yeah.
Right? Meta, I think, was the one struggled the most with how do they monetize? Because remember, most of us don't pay for Facebook or Insta or WhatsApp. This is a way they can monetize.
Yeah. To that point, I wonder if this deal like literally got started right after their earnings call. I mean, I think given the way how aggressive Meta has been, I wouldn't be surprised if it basically got pulled off in like 2-ish month. Yeah. What does it say about like Meta? I mean, again, Meta's been trying to build a lot of this stuff in-house and they really clearly haven't been able to. What does it say about some of these tech giants being able to build versus buy?
Two things. Like I think this is not particularly surprising from Meta, right? If I remember the day when they announced the Instagram deal, and Insta was raising money or had just raised around at 500 million, and then Meta a month later came in and bought them for $1 billion, right? And at that time, that was such a far-fetched deal, and people thought it was ridiculous. But in hindsight, it was probably one of the best deals that Meta has done, right? So they took a technology, a DNA, and they kept the brand, they kept the team, they kept that kind of fairly isolated from the influence of Meta, other than the fact that they integrated Meta in a very seamless way and the consumers in a very seamless way into Instagram. The same thing was true with Messenger, right, and WhatsApp. So it wasn't like Facebook Messenger was not scaling or getting there, right? But when they saw WhatsApp and they saw what WhatsApp could do beyond the ecosystem, they fundamentally expanded the ecosystem of Meta. They just went and acquired it. And at that time, I don't know, was it like $20 billion? It was, again, a ridiculous kind of playbook, given that they had an internal messaging kind of service as well. But again, I think it just fundamentally expanded their playbook into a new orbit. This to me is very, very similar. I think it's not to say that they're accepting defeat on their internal explorations. They're just saying, hey, this is not one that we need to kind of build all the way. We're happy to buy as well. Inorganic growth to supplement organic kind of explorations. And also, I think it's a good way to kind of change up the DNA a little bit. You bring in folks that are 100%, pure blood, AI agent first mindset folks into a company that's been running for a very long time. It's a great way to kind of reinvigorate everything. So I actually think it makes a lot of sense from that standpoint.
Yeah. I'm curious to see how to the extent that they integrate or not at all, but like if there's any like cultural, the integration of the different engineering mindsets, a Chinese first AI engineering team versus that's relatively R&D focused versus like Meta's in-house team. Okay. And then onto the geopolitical side, then a few things. One is, of course, we don't know if this deal could get blocked or what might happen to it. Do we think that this would become a trend, right? Like Chinese companies, my understanding is that, the reason Manus did this is because in China, a lot of the AI investors and a lot of the focus is really on like this infrastructure level and people are not really paying attention to apps. So Manus actually moved to Singapore so that they could access international capital and access like a cohort of people who are interested in actually in the application layer. And they just weren't getting the attention that they needed in China. And so like, assuming this deal comes through, do we think that this is going to become a trend? We're going to see other Chinese companies try to pull something like this off. I feel like the Chinese government might let one or two of them go, but I feel like this, like they've kind of maybe burned the bridge behind them for other AI companies, Chinese AI companies.
Yeah. So I think we shouldn't use future tense when we say that it might become a trend. It has become a trend.
Yeah.
There are many companies doing this, and there is concern, from what I understand, in China about it. And this has now become the public face of it. If you recall, Didi became the public face of going to America and listing and doing what you want for international investor attention. And they were punished quite aggressively for that, to show an example to everybody else. So there's no question that a lot of companies who have not yet become famous the way Manus has re-headquartered to Singapore, and it is now under scrutiny. They might be the last high-profile one, and it's under scrutiny from both sides. And when it's both the U.S. and China questioning it, that Singapore is going to start to question it as well. To
Well,
what
I don't
extent
think
they
the
want to
U.S. is
allow it.
questioning it, right? The U.S. is good. Like,
No, the U.S. is questioning it from a different angle because there's a lot of, all of the NVIDIA restrictions. Singapore is one of the biggest buyers of NVIDIA chips in the world. I mean, give me a break.
you don't know what's happening here. Yeah.
We'll leave some of that conversation for offline then.
Yeah, I mean, I definitely agree with that. So, Alexei, do you know if some of these investigations happened before or after the acquisition? Like, was the acquisition really what triggered it, or were the Chinese government already starting to look into the re-headquartering of a lot of Chinese AI companies over here?
I think this one, so the public confirmation that they are reviewing export controls was specifically for this one. They have not yet come out, as far as I know, and said we're reviewing the whole thing. But usually that is, that's the approach they take. They review an incident, and if they decide it might have precedent-setting risk, then they start looking at it more broadly, and that's actually true of all regulators. So if they think this is not a big enough deal, they'll just deal with the one, and that's it. But I suspect if they do decide to have any sort of decision that is not a blanket approval, then that'll be a message to everybody else that this is now the new process. And Prashant mentioned that obviously this is different from ports, but TikTok is another example that is a similar situation, right? China flexed its muscle and said, "Hold on a second, we get approval rights on this. Let's figure out the way to make it work. We're not against it, but it's got to go in a way that we're comfortable with." And they might wrap the two together even. So to my knowledge, it wasn't started before, but as a result of kind of to review. But who knows, in all honesty.
Yeah, will definitely be interesting. I mean, the thing that I read coming across some of this was this Chinese idea of 卸磨杀驴, which is like basically killing the donkey after the work is done or after the grinding is done. And the pro-Chinese tech guys are basically like, you use Chinese engineers to kind of launch this whole thing, and then they did do like a massive cut, I think, when they re-headquartered, and obviously now they're exiting all of China. And so I think it's the geopolitical thing. It's like they have to exit China in order to have gotten this deal done. Otherwise, they would have gotten themselves into a ByteDance TikTok situation. But I do think it feels bad from a pro-Chinese tech perspective as well. Yeah. Okay, so if we take this acquisition and then also compare it to the Groq NVIDIA acquisition, where obviously Groq, it was kind of like a buyout in all but name, for $20 billion from NVIDIA. Do you think these AI startups are starting to sell now because they're trying to take their chips off the table and they are worried about this potential bubble popping? And so like, we're just going to get out while the getting out's still good? Or, I mean, do you see them as a trend in terms of startups kind of AI startups selling at this point? They're obviously very different types of company. Or do you think they're just like two random situations where they both had a good deal and they went for it?
I do think there's a little bit of consolidation to be had. I think there's way too much investment that's gone in way too quickly, and everyone's trying to figure out how the deck will get stacked here. So I can see it from NVIDIA's standpoint, saying, okay, we want to go vertically integrate upward. I can also see it from Groq's perspective, right? Saying, hey, look, if this allows us to survive survive a little bit better in comparison to an open AI and the next foundational model, why not, right? So I think everyone is trying to figure out and shore up a little bit of their future, but at the same time, I think people are also, even internally, you want to take some chips off the table. And if that means you have to take a lot of chips off the table, then I think you will. If that's the play, then you will take a lot of chips off the table. I know, Maria, when we were discussing this a little bit offline the other day, is like there's always been a story in hindsight that we've looked at and said, oh, Google could have become Yahoo for $1 billion back in the day, right? So Yahoo had made a play and Google walked away. I think, unfortunately, we don't get to see the sliding doors in the other way. But this is not a lack of conviction. I think this is in some ways just a realization that some of this consolidation has to happen for all parties to survive. I actually see this slightly differently than a search engine embedding inside a web portal, which is what Yahoo was back in the day. But yeah, I'm happy to debate a little bit.
Yeah.
I think that's right, and it's probably a combination of both, right? So they've gotten really interesting deals that take their businesses forward, but also probably provide some protection. And from the buyer's point of view, knowing that we don't know when. Is it this year? Is it next year? Is it in 2028? But a reckoning is coming for sure, right? It always does. It's just a question of how long it takes for the supply to overwhelm the demand for the new thing. It will happen. And at that point, you want to be in as strong a position as possible if you're one of the big guys as well. Because yes, there's no question that, a Facebook will survive and NVIDIA will survive. But NVIDIA doesn't want to survive with a $700 billion market cap after hitting 4, right? Because a lot of the founders, a lot of the senior executives' net worth is tied up in these stocks. So it's not just about, will the company survive? Of course it will. But they want it to survive incredibly, strongly, for lack of a better word. And that means bolting on things that you think might give you more opportunity, because in something so new, we all speculate on where we think it goes, but we might miss it, and it might be something completely different. And if having 4 tools in your toolkit, as Prashant likes to talk about, right? Like if you have 4 things that you can do, you have a slightly higher chance of one of them being the thing that justifies it all.
Yeah. I feel like it made sense for Manus to sell, because I think that 2 bill was going to be hard to come by in the future, and they'd be building back up for that for quite a while. But I actually feel like Groq maybe sold a little bit too early, because they were making some massive inroads. I think that capital wasn't going to be that difficult for them to raise. And again, if you compare, and it felt like they were kind of at the beginning of their journey. So, again, there are no sliding doors, but I felt like the conviction there founder conviction level could have been maybe a little bit higher.
Yeah. And I'll get to that in a second. Do you guys think if Gemini 3 with the TPU architecture that Google put out had not kind of made the news as big, or had not come out as strongly, that this deal would have made sense for NVIDIA?
No, I think,
again, it's a very similar thing to the whole what you were saying, Maria. Had the kind of the analyst day call for Facebook or for Meta gone better, would they have gone chasing after Manus? Very similarly, so now is it like, well, NVIDIA thinking, crap, until now we truly had the full field to ourselves. Now, if the TPU architecture and these models getting trained for a lot cheaper on that architecture becomes reality, do we not want to control something upstream?
And literally buy the creator of the TPU, right?
Correct.
Yeah,
Correct.
I think it makes sense from NVIDIA's point of view. I think that Groq probably, I don't know, like it's easier to say, but I feel like Groq actually had higher valuations and higher opportunities coming their way had they stayed independent. But it would have been a long, brutal grind, right? So then this comes down to like founder level conviction and what they're looking to do. And Jonathan Ross is an engineer so like maybe he just was like this. It's great. Like 20 bill, I'd take that. But like, I'm me.
Yeah, and let's not forget, the whole thing, we haven't experienced it in the last couple of years because we've had nothing but demand for TPUs and GPUs and so on. But you go back 20, 30 years, these things go in brutal, brutal cycles. Again, we don't know what the deal is inside. It might be access to all this cash and engineering talent and unlimited money to pursue R&D projects. To an engineer may well be more interesting.
Yeah. I just, we're at the very beginning of the inference phase, and that is exactly what Groq has always excelled at. And so I think I just think they sold a bit
and I
early.
think this is also the year of ROI rationalization. I think we talked about this last year as like another one of those bingo cards that we talk about. But I think this will be the year ROI rationalization becomes the conversation in a lot of boardrooms. And as you have those conversations, yeah, look, I think at 1 billion, 2 billion, a lot of people have stomach. At 20, you're like, wow, do I really have the stomach to leave all the chips on the table, or do I want to take some off? Well, I don't have the opportunity to take some off. So I guess I'll have to find my upside some other way.
Yeah.
And I think some of these deals, while we only see what's on the headlines, I think internally there may be beautiful accelerating laddering structures that we don't that could preserve a lot of that upside with and take off some of the risk.
Yeah, and Prashant, I mean, you're more familiar with this than I am, having been in these shoes. But also, you also have, as a founder, all your investors and the venture capital funds. Basically, you might have been the last investment in a venture capital fund that needs to get to a place where they're returning some capital, and they're looking at potentially this amazing transformative transaction that allows them to claim an amazing IRR for their next fundraise. It has nothing to do with technology. It has nothing to do with the founder, but there will be someone on the board saying, this is pretty good situation all around, guys.
Yeah. And they could sway the whole crowd. Yeah. But typically, if the founder wants to stay, if the founder wants to nuke, there's no chance that the investors get to do something different at this stage of any of these tech companies, right? But typically, if the founder wants to stay and one of the investors wants to get out because they're in a cycle, and if you do have enough capital diversity around the table, you should be okay. You don't know. I don't know is particularly like who was put the private capital around the table, but I also do think there's a lot of like people want to take their chips off the table and say, hey, let's call it a day. Let's return some of the capital and have a great outcome.
Yeah.
And I think that also plays out.
Yeah. I mean, I think this goes back to founder conviction. I mean, this is also why, okay, Jensen is like a once in a million, 10 million shots, but it's like, he was running NVIDIA for like 30 plus years before this gold rush of the last like 3 to 4 years really just kind of catapulted him. But he was out there and he was grinding and he was doing because this is like what he believed in. And it just so happened that, this AI thing came and NVIDIA was perfectly fitted for it. And so anyways, I don't know. I mean, no disrespect. I think obviously it's a hard decision, but I do actually feel like Groq probably had a little bit more runway to go as an independent company. That's just my take. Okay, let's switch gears.
You know who we need to get on the podcast next, right?
Jonathan Ross. I met him in October when he was in Singapore, and he was like very adamant. He was like, we're better at inference than NVIDIA and blah, blah, blah. And like, this is what they're made for. And so, yeah, I mean, but I get it. A really flashy, beautiful offer comes by and it's tough being, I think, doing what he was doing. And so, yeah, it probably was like a nice looking lifeline out. Okay, let's shift gears. I want to talk about, two things, I guess. Very interesting IPOs happening in the Hong Kong Stock Exchange yesterday and today, literally. Zhipu IPO'd yesterday. They raised $558 million. Shares, I think, were up around 15% as of earlier today. And then MiniMax IPO today, raising $618 million, and shares have been doing really well. I think also are up like 90% from this morning. Okay, great. So Alexi, fill us in. What is the story on these? I mean, obviously you've known about this for a while. But yeah, like, what does this say about, the sentiment of Chinese AI stocks? What does this say about like, what you kind of foresee for the Hong Kong Stock Exchange going forward? Yeah.
So a couple of interesting things. So first off, unlike the Singapore transaction, for anybody who wants to list in Hong Kong, the local regulator in China has to give approval first. So it's a process thing. It's public information that this is the case. So I'm not saying anything, and I'm not going to say anything confidential, but it's an interesting thing that they would have gotten permission before they came to Hong Kong. Mm-hmm. That's first. Second, listing in Hong Kong is like listing, it's like going to the US Virgin Islands. It's like you haven't left the country really. So very clearly there's it's still home, but you get access to international capital. What I find really interesting is both of them listed around a 6 billion market cap and made available about 10% of the available shares. Like it's a weird coincidence within a day of each other. Same exact, similar valuation, similar public float. So this is potentially, to your point about implications, this is potentially the framework. And now we may see just this flood of more and more AI related companies coming to Hong Kong from China to list just enough to really change the story around who is the dominant player in this space. So yes,
Yeah.
OpenAI is getting they talking about I think what are they talking about, an $800 billion valuation?
Mm-hmm.
Yeah.
Yeah.
I don't think China is going to have an $800 billion AI company anytime soon, but they might have 40 $40 billion companies. I did that math wrong. Whatever is 800 divided by 40.
My question is like, is it a coincidence or like was this, a bit? I mean, of course, like the review process and stuff, you go through what you go through, but like, is it a coincidence? I mean, these people were approved to kind of list in Hong Kong and leave China, of course, and then the valuation I think is one thing, but then the timing.
Yeah. So from a Hong Kong point of view, again, without saying anything kind of that isn't public, the way the process works in Hong Kong is when you apply, there's a process, and if they applied within a day or within a week or two of each other, and they went through the process at the same speed of back and forth with the exchange and the local regulator and so on, there is absolutely nothing strange about them completing the process at around the same time and being able to list it around the same time. So the surprising thing is that they would have filed similar times. What caused them to do that? Who knows? But yeah, that's to me that the interesting thing. Maybe it could be as simple as the founders both know each other and decided, you know what? Instead of one of us going first or the other one going first, let's just both do it.
Yeah. Yeah. Or they got the nudge, nudge, wink from the, from the Chinese government to
to
go
get it going, right?
Yeah.
And that's the other thing. What's always been interesting to me is which kind of companies are permitted to list abroad versus not. China is very clear. If it's national security related, or if you can interpret it as national security related, you list in Shenzhen, Shanghai. They don't like giving permission. And the Didi situation was actually an example of that, because the major cities in China were becoming dependent on Didi transport. And of course, Didi had a lot of map data. I don't know if either of you have been in China recently, but like you use Google Maps and you're always a few blocks off from where you think you are, right?
Yeah.
Didi doesn't have that problem, obviously. And them listing abroad ultimately was determined to be a concern. So there would have been a clear, these companies are okay to go. This may be the establishment of a rule set or framework of these kind of companies okay, these other kind of companies not okay. We're not seeing, we've seen a few semiconductor companies as well, but not nearly, most of them are back home.
Yeah. Right. Okay. So the play for Chinese companies at this point, Chinese AI companies at this point are like, obviously stay at home if you're, infrastructure and national interest dependent. Potentially re-headquartered to Singapore and then go a lot more international, but that path might get blocked soon. Or get big enough so that you can actually list in Hong Kong and, have the proper approval, but you also get like the capital, you can free up capital and access additional capital that way, right?
Yeah.
Okay. I also pulled this table. Hold on, let me share my screen. I don't know if y'all saw it, but I thought this was interesting as well. So sorry, I don't think I've updated but anyway, so it's revenue. I kind of annualized Zhipu and MiniMax based off of their reportings, but then the valuation, the revenue multiples, and then of course when it was founded. And the thing that kind of stood out to me is is like the Chinese companies and then Mistral down here have much higher revenue multiples. And so they are monetizing to a much lower degree. But similarly, I think, their valuation suitably follows. So what does this say about Chinese AI companies and how they think about monetization? And then, of course, like in terms of going public, obviously these two have just gone public. Nobody else has. And so they're going public earlier and at higher revenue multiples. Does that mean anything, or are we looking at too few data points to draw any sort of like conclusions from this?
One thing that immediately comes to mind for me, and this is how I think about this new world that we're entering in terms of investments, is that everything is going to be divided by security lines. what makes us sovereign? Abu Dhabi wants to make sure that it can do all the things on its own. The US, of course, does. China, of course, does. So the world of having, if you think about kind of like tech, Web 2.0, it was a world that was led and owned by America for a very, very long time. Eventually, China managed to create its own ecosystem, but the rest of the world largely still depends on the US ecosystem, right? No one wants that to happen again except for America. So everyone is championing their own domestic potential winners, and investors are aware of this. So it's no longer enough to only have OpenAI or Anthropic, because you know that they will not be permitted to dominate the world the way Google was, or Microsoft was, or Apple was. So you need to spread what you can, the investments you're making. I would not be surprised to learn that a lot of the money that just gone to MiniMax and Zhipu is from people who also have OpenAI and Anthropic, as a diversification trade to make sure that if there end up being two big sets of winners, a quote unquote Western one and an Asian one, they have both.
Yeah.
And of course, there's probably an agreement about how much to list, how much to monetize at such an early stage. So what you end up getting is massive oversubscription to the IPO, and thus the very high revenue multiple.
Yeah. I mean, it does feel like there's a premium for being the regional, like the regional leader in this space, right? So Mistral obviously as the EU one, and then these two as the Chinese ones.
The other interesting component is most of the Western world can get access to OpenAI and Anthropic privately. But ever since Trump 1.0, the PE world and the VC world has been very much split, and a lot of the Western, we had all these stories about Sequoia splitting Sequoia China into a separate standalone business. Very few Western investors have any China AI exposure today, and these are the first things. You had Manus, and you had this, and that's it. So the public way is the only way to not have scrutiny, because now it's just a public stock in Hong Kong. There's no restriction against that yet.
Right. So right. So Manus went from Chinese to now basically American, but these stocks are like obviously offering a more blended way in order to have like the rest of the world the whole world on your cap table potentially, or as part of your equity.
And these guys are not going to try to go global, right? They're targeting the domestic market. Full stop.
Prashant, any thoughts?
I like to say, so I actually find that interesting. So if I contrast this to India, right? If you typically list in India, and I know Hong Kong is slightly different than listing in mainland China, but if you list in India, it's the local demand that basically can't find its way out that ends up like driving up the valuations for the domestic market, right? But in this case, you're saying it's the international demand to basically access China, but not directly into China, but it via Hong Kong, that's driving up the revenue multiple for Zhipu and MiniMax versus the other.
This is a key point. Very few mainland Chinese investors would have been able to participate in these IPOs. It's not permitted. So for a Hong Kong stock to qualify for mainland distribution, there's a process. And IPOs are not part of it. They have to get to a certain size and scale, and they have to apply. Almost all of this, 500 million or so each that they've raised would have been from overseas investors or mainland investors and funds and asset managers that already have money offshore.
Yeah.
So this is a international investor access, and they would have done roadshows before settling on the market cap, and they would have gone around and gone, oh my God, people are willing to give us a little bit of money at this pretty punchy valuation just to get access to China AI. Let's do a little.
Yeah. But it's safe because it's only 10% of the stock or of the equity, right? So it's like, we'll take the money and without giving up any of the real control that still sits in China.
Yeah.
But the question is,
sorry, go ahead.
The question is, would they have been able to raise this much in primary had they
not
done a private deal?
Not at this multiple, most likely, right? Because a mainland Chinese investor would have 10 choices
correct
of some of these companies,
Correct.
and of course would have exposure to Tencent, which is doing its own thing, and Baidu, which is doing its own thing. This is a I always differentiate between a pure play thematic trade and a like Google is technically an AI trade, but it's a lot of other things, right? This is pure play AI. And they may have, with their bankers, determined that they can get a lot more bang for buck.
Yeah, exactly.
From an quasi-overseas listing.
Yeah, I mean, I definitely think it's the access to the Chinese AI market, and they are getting that premium for it, and they are milking it, which good for them. Like, people are obviously willing to pay, so it's working.
Does it continue? I mean, but it looks like the process is not that straightforward to get local regulatory approval, then get on the exchange. These guys must have lost 6 months of their productive time going through this process. This early in the company's life, is it worth it? And now they have the potential overhead of like being publicly listed, associated compliances and filings and everything else.
Yeah.
But yeah, it would be good to see if the world continues to kind of honor that valuation. It may have had a pop in the last couple of days, but
it's way too early. I agree.
Zhipu didn't. Their pop wasn't that big. Today's MiniMax popped a lot. The Zhipu one did go up as well, but not by nearly as much. We should check back in on this when we do the next episode and see what is their market cap then.
Well, actually, Alexi, do you know why MiniMax would have popped so much and not Zhipu? Like,
no idea.
Okay.
It could. I mean, nobody likes to hear this, but like sometimes I think the market is just weird. It could be because it's Friday. And more people had time to get their IPO application in, right? Because I mean, I don't know anything about either of these companies, right? So it could be that one product is actually legitimately much better. But it could also be as simple as, because one was a day earlier, the way IPOs work, when you're a retail investor, you put in your application and you say, like, I know that I want to buy $5,000 worth, but there's going to be oversubscribed and I'm only going to get like $500 instead of 5,000, right? So they could have put one in, 5,000 for the first one. And then shortly after the second one came out, not knowing how much they're going to get in the first one, but this might be the last chance. Oh, I'll put in 20,000 on the second one. And then they'd have to do that. They would have had to do that a week or so before today and yesterday. So, but my sense is MiniMax was way more oversubscribed than Zhipu, but I don't know for sure. I haven't checked the numbers. But yeah, but the IPO market always confuses me. I never understand why some things skyrocket and others don't.
Great. Yeah. Thanks for demystifying that one.
The
markets are weird.
Of me. Now it's perfectly clear.
Well, I mean, you know what? I think you're just being honest, which a lot of other people would just try to come up with some good fluff and a good story. Okay, last topic that I wanted to talk about for today is actually, the pipeline for the IPO pipelines for China, Hong Kong, and India are super strong this year. I mean, again, we've been talking about, especially for Hong Kong and India, quite a bit. And I was doing research into this. It was coming out as like, okay, Alexi, you've mentioned this already, but China is really about the industrial policy plays. Hong Kong is China adjacent plays, a little bit more strategic and growth oriented. Obviously nothing that's like, it's not a little bit more risky. And then in India, it looks like what's coming down the pipeline for this year is basically things that are already working, right? So like companies that have basically gotten fit. And so do y'all agree with that characterization? And then do we want to shout out any specific company that might be IPOing in any of the three markets?
Yeah, so I think in India, there are a couple of companies that are interesting to watch, right? So you'll have PhonePe, which has been on the watch for a while. Of course, there's rumors that company like Flipkart will also look to file at some point this year. I don't know if it's early part or when exactly, but I think you will see Flipkart perhaps, and for the benefit of for the audience, Flipkart is now owned by Walmart in the US. So and I think so this will be like a divesting opportunity of sorts, I suppose. And Flipkart will list domestically. I think that'll do really well. Again, it's a very big play. Yeah, those are the two that I think, when I look at the list, I think those are the two that stand out for me.
Did you
For
hear
India.
about oil potentially listing?
Yeah, and I think Oyo's, again, Oyo wanted to list in 2021, and I think they were held back by SoftBank, who's one of their major investors, who wanted to perhaps hold on for a little bit longer. But again, I think the year of 2025, they've kind of like cleaned up their books, and they've kind of hit a really good trend in terms of being EBITDA positive. So I think they will list this year. Don't know
And the
how.
markets seem
I
better
think they're
this
looking to
year.
raise. Yeah, I think raise about 700 odd million at like a $7-8 billion valuation is I think what's expected. Interesting times. Yeah, India IPOs. There's a bunch of them coming up this year. I think it'll be interesting to watch for how they do.
All right. Anything that could derail some of these listings, or I think the overall like market exuberance at the moment?
Yeah, I think there's a lot of exuberance that'll carry into this year. Um, I wouldn't. I mean, I know the geopolitics around the world are not very stable, to be honest, but I don't know how that affects any of this. Maybe Alexi, you have a viewpoint, but
Yeah, I don't think it does for now. Yeah.
I think these are very domestic plays, and yeah.
Okay,
I
so you
think
think
the main.
geopolitics? Yeah.
Go ahead.
Razor
No,
Pay is the other one. Sorry, PhonePe and Razor Pay. I think both of them will.
I was gonna say, so you don't think geopolitics? I mean, it's like obviously it's been pretty crazy over the last year since the Trump administration has really kind of gotten underway. So you think geopolitics? People are just kind of like used to the chaos at this point.
What I always tell clients is there's a news cycle, there's a political cycle, and there's an earnings and stock market cycle, and they're not necessarily the same thing or even adjacent to each other. Okay, so Trump arrested Maduro, and what happened? Like think about what happened in the stock market this week. Nothing. Nothing at all. Last year, all my clients going, how is this possible? Trump's been in office for a year. Look at all the crazy things. What do you mean? Earnings are up. Companies are making money. Inflation is down. No one's been fired yet. Sounds like a pretty normal year from those things that matter.
Yeah.
Is there a lot more tension between Denmark and America? Yes. Is Iran a little bit worried right now, given what just happened in Venezuela? Probably. But these things don't affect, an IPO of an AI company in China. For me, the biggest risk is, does one of the big US companies have some sort of disappointment? What if the EU, I don't know if you saw, Elon Musk's Groq is now being investigated for child pornography, fake images that it's posting. I mean, and the fact that, so this is where I will get political. Like the right answer to that is we will fix it, not, the authorities should enforce it. It's nonsense. But anyway, but what if the EU gets really serious about this? Or what if the US does, as it should? What if one of the companies just has a really bad earnings number as a result of all the capex and just everybody switching to the easier to use Gemini 3 because it's in your browser already? So I think any sort of quote unquote failure by one of the US leaders of this AI boom will kind of, that expression of when the US catches a cold, everybody sneezes, or the other way around.
Yeah.
I think we will have that on steroids should that happen in the U.S. tech sector. That to me is a bigger worry than geopolitics or even the macroeconomy in any of the locations that we all worry.
Yeah, I think that would definitely affect some of those Hong Kong AI ones, but I think maybe the India ones, because they're more domestic and less AI oriented, still might be okay.
Yeah, and a lot of these companies have done the reverse flip, right? They've taken their Delaware corporations and brought them into India, or taken their Singapore corporations, brought them into India. So I think they've kind of, in some ways, insulated themselves fairly well, and they did it for different reasons. But I think they're also looking at raising their capital from domestic investors, not necessarily looking to access foreign capital in the same way. But But yeah, again, I think one other thing I would watch for, other than these AI kind of shaky grounds or that Alexei mentioned, is typically I also like to watch like what's happening with the real estate. I think the U.S. real estate market may actually also be on some shaky grounds, and we should kind of like maybe chart this together for our next session to see like what's happening in the real estate and what's happening in some of these AI companies at the same time. So then give it perhaps a slightly more holistic picture of like how the economy is really faring.
Yeah. Okay.
And
Let's
if
do that.
that
Who gets the cold, right?
who catches the cold there.
Yeah.
Yeah.
Okay. All right. So it's an exciting end to the 2025. And I think 2026 looks really interesting for the Asia market. So I'm kind of excited to see how this year will play out. Anything else?
Yeah, absolutely.
We good to wrap?
Yeah, I think so.
So
Cool. All right. Thank you, everyone, for tuning in for this very first session of the 6040 podcast in 2026. You can drop us feedback or suggestions at the 6040 podcast at techinasia.com, and we will see you in 2 weeks' time. Thanks. Bye.